Well, as I said, we've just seen a report being released on the buy-to-let market and a slowdown in pace coming through there. So buying properties for investment or letting purposes has been tapering off. It's unsurprising, really, where you've got more focus now on households actually cleaning up the status of their balance sheets.
Yes, I think a lot of households are still financially pressured. They're not all in trouble, but there has been a significant degree of financial pressure. So primary residential demand is the key focus. And according to the survey, for the third quarter, so consecutive quarter, only 8% of home purchases being buy-to-let. To give you an idea, back in the boom years when we started the survey in 2004, that was nearer to 25% of all properties. So it's relatively benign at the moment. But yes, one would expect with a sort of financial pressure, and the fact too that a lot of less seasoned investors go for capital growth, and there isn't much of that at the moment.
Let's take a look at that, because there is the perception of capital growth prospects within this sector. What's the status in that regard? What are you looking at when it comes to return on investment?
Well, I think it's at the moment. I think a lot of investors ride a trend. They climb in when the trend gets going. So when the capital growth started increasing rapidly early last decade, they saw a chance to make, you could call it speculative perhaps, to borrow money often and to make money purely out of capital growth, not out of actual income stream. These days we're looking at 4.5% year-on-year house price increases. Interest rates are higher than that, prime rate at 9%. So really, if you're borrowing money to ride the capital growth trend, it just does not make sense at all. With regards to yields, for those more seasoned investors who look at the income stream, it's difficult to get a grip on where yields are at the moment. But the perceptions, or my feeling is, after that big capital growth last decade, yields are probably still on the low side if we had decent data for it. But we look to rental market trends to try and get a grip on that. And the rental market, after showing some promise early or during last year to early this year, we saw rental growth actually tapering off somewhat. So the rental market also not setting the world alight. So my feel is, although I can't prove it, is that yields are generally on the low side still.
And of course, we're looking then at a deterioration in that investment incentive at this stage of the game. To what extent do you see this trend impacting prices in the rental market? Because one assumes that the supply-demand dynamic is going to shift here as supply becomes a little bit more constrained moving forward.
Well, yes, that is the ultimate recipe for a recovery in the rental market, is a constraint of supply of property on the market. So this low buy-to-let buying at the moment is in a way a good thing up until the rental market gets back into balance and there's a shortage of supply. Then you would see a faster rental market ultimately, or faster rental growth, widening yields, and then buy-to-let would become more attractive. But at the moment, if we look at what's happening in the rental market, still pretty weak. The TPN, the Credit Bureau, suggests that there's been a deterioration in the percentage of tenants being in good standing in recent times, possibly feeling the pinch of inflation increases in recent times. So it looks like that attractiveness we're talking about might take a few years to return.
In fact, this report highlighting that tenants on average are arguably the most sensitive to the kind of economic events we're seeing play themselves out.
Yes, tenants may not have they don't have big home loans generally, so they're perhaps not as indebted as the home owners, who are reveling in the fact that interest rates have come down dramatically since a few years ago. The tenant, I think, is more sensitive to consumer price inflation increases, the big one being petrol price increases as of late, so that transport sub-index. But of course, the electricity and the other utilities tariffs increases, and even food price inflation having accelerated quite significantly in recent months.
Yep, let's take a look at for the real investors out there as opposed to the speculators, because the appeal would lie in the future income stream moving forward, and that's expected to emanate from the property market. I mean, you've highlighted that FNB's opinion is that the rental market should flourish relative to the home buying market at some stage of the game. So for those who are real investors, is that appeal still there and intact?
I think there's a group, and there is some buy-to-let buying, 8%. So, and I think at the moment, with there being a lot of distressed sales on the market, financially pressured households having to offload properties, there is a chance for the seasoned investor to snoop around perhaps at the auctions and get that discount, that heavily discounted property, which is below what I guess it gets offloaded below market value. So there are those opportunities because of financial distress. But on average, I suspect at the moment, on average, the yields are still relatively low. So it's not, it's unique opportunities, it's unique properties. It's not the market as a whole that presents a big opportunity at the moment.
Just while we have you here at the desk, I mean, as consumers focus on the essentials and within this low interest rate scenario that we find ourselves in right now, what trends are we seeing in home buying for primary residential properties right now? Because the last time you were here, we spoke about the shift happening where we had many home buyers downscaling, you know, as it becomes less affordable to manage and, you know, administer a household.
Yes, there's still a lot of downscaling. According to our recent agent survey, 19% still downscaling due to financial pressure. So that's very significant. Half of those are believed to end up in the rental market and half actually buy down. So, and I think these trends may continue for some time, given the costs associated with home ownership, the utilities and tariff costs, and the financial pressure. So I would expect, yes, that well, we have seen in recent times our house price index for small houses outperforming that of the larger houses, the more affordable segments of the market outperforming the higher income segments, and I think more of the same for the foreseeable future.